The broadcast is now starting. All attendees are in listen-only mode.
Hello, good afternoon. My name is Wouter Born from CXO-Cockpit. Welcome to this webinar about corporate performance analytics with a special topic around predictive analytics. I'm really glad that so many of you could join this webinar, and I'm excited to talk you through this topic for the next 30 minutes. Maybe just to start, some quick introduction and an agenda, but also I'd like to ask you to, if you have any questions, there is in the GoToWebinar software, there's a feature to ask these questions. Just type them in. I'll try to answer them at the end. If there's no time left, we'll follow up questions on email, so you always get an answer. I'll try to handle as much questions as we can during the webinar. I'll give you a quick introduction today about CXO-Cockpit. I will then dive into the topic of corporate performance analytics, and we'll end up with a great demo. Spend hopefully most of the time in the demo to really see, okay, how would this work for a real company, and how could you really use topics like what we discussed today. Quickly about CXO. We are a company founded by a group of EPM experts already more than 10 years ago. We at this moment serve about 100 customers globally. Typically, the typical CXO-Cockpit customer are larger companies with certain complex reporting needs. We normally work with your CFO office directly to provide strategic performance reporting or performance analytics, and we feed this dashboard or our software from the typical C-level suite systems like EPM systems, like corporate budgeting and planning systems, like corporate consolidation systems, etc. Our software is completely developed in-house. And we support it in-house as well. We're based out of Netherlands, Utrecht, and I'm working from our second headquarter in Atlanta, Georgia, from where we serve the USA market. I think just to highlight some of our great customers that we have today, many of these names you probably recognize, but those are all companies that are leaders in digital reporting. And I think the typical customer that works with us and that makes a success about of software like ours are companies with a great vision about, okay, how can I reduce time on data preparation and report preparation, and how can I spend more time on actual analysis? And that's what we're going to talk about today. It's all about the digital office, the digitalization of the CFO office. We see that many companies invest nowadays in great online systems, but then the most important user group, maybe senior management, CFO, or the rest of the board members, are still receiving Excel files, and that's where we specialize in. How can we digitalize the CFO office, and what are the things that are needed in that space? Well, I think the most important thing is that in this office, there are very valuable, highly educated resources that are spending a lot of time in preparing numbers. And we believe that analysis and reporting should be the main time that they should spend that should be the main effort where they spend their time on, instead of all the preparation. And there's a big win for IT systems like CXO-Cockpit. So what do we bring? And this is also things that I will show you today. But the most important thing is that we provide automation of your complete corporate reporting pack, your digital, your current book. We make that digital. It's mobile enabled. It supports a lot of collaboration features, which we'll see today. Also, calculation power is important, of which I think the predictive analytics is a great example. Connectivity to many data sources, that's something what CXO-Cockpit brings. And there's a lot of narrative process features in CXO-Cockpit. So it's not only about the actual numbers that come from your systems or the KPIs that say if you're doing it good or not. It's also what is the story behind this. And there are many ways how this story can be written. And today we'll have a look at this, how this would work in practice. Of course, analytics and security are the last two core features in CXO-Cockpit. This data has to be secure. It's very classified that we're talking about. So yeah, security is a very important part. So when we talk about predictive analytics, in the space of enterprise performance management or corporate performance management or business performance management, however you call it, but you're talking about aggregated data that is typically driven by finance, and there are accounting rules that you have to deal with. So when you're talking about predictive analytics in this space, I don't think you have the ultimate freedom to do things just the way you want. Algorithms are great, but within accountancy, within finance, it's about facts. It's about, is this data right or not? And I think what we're going to show today is a perfect balance between respecting the accounting rules and understanding that finance comes with complex hierarchies and structures, and still taking benefit from predictive analytics. So today I'll take you through a demo where we're going to look at two things. We're going to look at bringing the total picture together, because when you want to start predicting, you want to have the background to understand why you're predicting something. It's predictive analytics is also about, can I link my my most important result KPIs to more operational KPIs? Can I understand why I'm going to make a certain quarter really well, and what are the drivers behind this? And can I have a discussion about this with my team members or with business users? I think that's the story about predictive analytics, and then eventually you can let a system predict future based on historical patterns. So we're going to move to the live demo, and this is a demo that has been based on how a software company like CXO-Cockpit would use a system like CXO-Cockpit. So today I'm using an anonymized demo, but that could have been used by a company like ours, but a lot bigger, obviously. So it's a software company that is both doing on-premise licenses, and they're doing software as a service cloud. So they're kind of in this transition. When I'm going to log on to this dashboard, which is a complete web-based dashboard, as you see here, I access this from a Chrome browser, which could have been any other browser. Let me move to full screen. The first thing you'll see is that the login button, it doesn't ask me anymore for a password. And that's because we use single sign-on. This is already a link to the Active Directory of this organization. And that means that I just can use single sign-on, which is typically a lot more secure than providing another password where people would, write that password on a post-it and put it on their computer, or other security breaches that could come with single password or with unique password policies. So the homepage, what we're looking at here, this dashboard is supposed to tell the total story. And before we're going to look into the actual prediction, we first like to understand the total story of this company. And since this is a software company, there are two drivers that are really important. One is the MRR, which is the monthly recurring revenue. Any company in the SaaS business is caring about MRR or ARR, depending on how their contracts are structured. Another important thing is you can have a great monthly recurring revenue, but if your costs are going through the roof, your net income or EBITDA or whatever would be the core KPI would not be positive and might be behind. But what you already see in this dashboard, it provides arrows, and the arrows typically is you want in any performance reporting situation, you want to compare data that you have compared to a target. And here, if I hover over the arrow, I see that my actual is around 4 million, and my target was around 4.2. So the arrow is red, pointing down. My net income, though, is doing better. If I hover over this, I see I budgeted or planned on a net income of 3.8. Well, if we look at these two result KPIs, if I call them result KPIs, one is really business driven, the other more is finance driven. I first like to look at the first one. As a software company and being part of the global management team of CXO-Cockpit, I know how it is to run a software company. You care about two things to increase your MRR. Increasing your MRR is a very important thing, but there are two things to achieve that. One thing is to make sure that your sales is executed in the most effective way. Another thing is that you want to keep the customers that you have. And let's first have a look on optimizing your sales. In the end, it's about two things: how big is my pipeline, how predictable is my pipeline, and how many deals have I signed so far. So we're looking here at September. In the target, this company should have sold by now 750,000 in MRR and only signed 529. So that's a big red. But the pipeline looks really good for the end of year. So the pipeline is actually promising, and that together should come above target. So they're a little bit behind, but with a promising pipeline. If we're going to look at that pipeline, we'd like to see, okay, where does this pipeline come from? And here you see that in this case, there are two things. The MRR growth in a long-term chart is an important one, but also how has the pipeline built up throughout the year? You see that we keep a version of the full sales pipeline month over month. And you see that the pipeline has been steady while the signed deals have been going up, resulting in the fact that we have been able to, as this company, we have been able to compensate the signed deals that left the pipeline with new pipeline. That's a good sign. So let me go back to the main page and talk about another thing. In order to start becoming predictive, it's important to also understand what's the value of manual forecasting. And with pipeline data, that's actually a manual forecasting process. So forecast accuracy is a really important one. Since in this system, we keep track of every week how the pipeline looks, I can actually tell at any moment in time, so throughout my whole year, what my prediction was 4 weeks ago versus the actual sales that I've been doing. So is there, how well have we been able to predict our sales? So this is the actual sales column. And you see that 4 weeks ago, we just thought that we would sell 426. And here, if you go 1 week back, you see that we thought we would sell 420. But if you go a little more down, you see that we've been more optimistic in our forecasting. So this is pessimistic where it's green. So we've been overachieving, underpromising. And here we have been overpromising, underachieving. I think what's important here with forecast accuracy that you see some kind of balance, and it's normal that the flow goes from one side to the other. There are always waves where people get really optimistic and then more realistic at some point. But forecast accuracy is an important one. Another key driver for the pipeline is lead generation. So we have a whole dashboard here in this application that shows, okay, what kind of leads are we generating in what region. I'm specifically interested in the North America region. I'm interested in hot leads that are unqualified. And from here, I can see which campaigns have been most successful generating the leads. So I can take a quick peek on stuff like leads. Okay, let's go back to the real finance topic or the overall topic. Before I go to finance, actually, I'd like to talk about the other driver for MRR, and that's churn. Churn is the definition of customers that walk away or reduce their contracts. So there is, for example, an overview in this dashboard that tell me, okay, this is what happened between December 2016 and August 2017, the current month. And you see that there's a lot of customers that either increase or close new contracts. But the red ones are the ones that either reduce their contract size or left or cancel their subscription, basically. So although there is a strong upgoing line, whatever is red accumulated, that's what you would consider as churn, and that's what you want to reduce or try to control as much as possible. So if I go back, how can you reduce churn? For example, by managing your customers in the most optimal way. So there is like a customer score report here. And this company keeps track of all their customers. Over the months, you see like a big list with all the active contracts. They check sponsorship, calculated customer score, amount of support cases that came in, and for example, on what software version this is. At the same time, when I talk about the story behind this, there is room to say, for example, we need where on Dex needs to be upgraded soon, since they're on a pretty old version. So I can make notes as part of my dashboard, and this is kind of free format notes, but you can also force certain notes to happen. I could put in a rule that I guide my user that they should explain any customer that is on a version below 6, for example. So that's an interesting dashboard. We've talked about the total overview and linking process KPIs to result KPIs. So the ultimate result KPI that I'm looking at here was MRR and how we could influence that from more organizational KPIs. Another thing that's pretty important in performance management is your financial performance. And that's where the whole thing comes together. If you have a good MRR increase, your net income should typically be good as well if you can maintain the cost. So let's click for a moment on net income and go more into the financial side of this demo and of this presentation. I'm going to a P&L statement here, and please not look too much on the predictive side on the right. Let's first have a look on what we see here in the main table. We see a P&L that would be true for a typical software company that, like I said, that does both cloud revenue, an important part here. I can click on cloud revenue. I can drill on the cloud revenues to understand, okay, what are the different cloud revenues. I can see how I performed over the past 9 months. We'll jump on that in a second. But there are also on-premise revenues, which are which I can highlight by clicking on it or drill further on it. So net software licenses, so new sales, and software maintenance are probably the two main drivers for the on-premise revenues. For the rest, it's a pretty, normal P&L with operating expenses, operating income, some tax, and eventually net income. This P&L is designed to be summarized. So if I don't want to compare to my budget, but I prefer to compare to my previous year numbers, I can just make that selection. So I keep a focused view on my variance and on how much I deviate on every single category. If I like to see this a month back, I could just move my point of view to July, and I would see the whole P&L a month back. So this is very different to more static reporting platforms where you would send out a report for the month of August. Now here, a manager can come in and get his own data. So these are all the basic benefits of CXO-Cockpit, including entity selection. We're looking at the headquarters of this company. What's probably a really interesting part, and that's more on the right side. For example, if I hit the total revenue line, I see there are 3 charts here for my main regions: USA, Europe, and rest of the world. If we look at this chart, we see a couple of interesting things. First of all, it doesn't overuse color. I see so many charts that use green as a very dominant color and color everything with bars. But I think here we're looking at something really informative. If we just look at the actual period here, for example, we can actually see that the gray area is what we've budgeted. This is our budget. The green area is the difference between the actual and the budget. So that's the part that we did better than we expected. So if I zoom out, from there you all of a sudden see a prediction line. And the line of the prediction comes with a couple of things. It has a main line, so that's the actual predicted line. But there is also a gray area around it, which we call the confidence interval. So there is a bandwidth around it that say, okay, how reliable is this prediction? And we'll zoom into this in a second. For example, in the rest of the world here, you see that this bandwidth is a lot wider. So the reliability of the data, there is less of a season pattern to be detected. If we just look at how it looks here at the rest of the world, you see, for example, there is a big underperformance here in a couple of months. The rest of the world is less of a predictable area, and also the performance here is they underperformed. If we look back at USA here on total revenues, I think another interesting thing is if you look at the line, we see all of a sudden a big hump in the last quarter of 2018, and we see kind of similar trend happening. In the last quarter of 2017, and we see similar trend happening in the last quarter of 2018. As a user, I could say, well, where is this coming from? Yeah, right. I see a system predicting some numbers, but I want to understand how it predicted it. So there's a drill down here that allows me to go to a deeper level of detail. And here you see that we predicted using not just the 2017 data, but also the full year of 2016 and the full year of 2015. And I can see from all these months from where I overscored and where I underperformed. But you see a clear increase every last quarter of the year. And that's typical for on-premise software sales. In the last quarter, a lot of projects need to be closed before the end of the year. This is an example of a public company, so it's really important to show that your sales is increasing. So all salespeople are incentivized to close the deals at the end of the year. At the same time, customers want to spend their budgets before the end of the year. So there's a higher activity in the selling and buying process on both sides, and that's what you see here in the prediction. At the same time, you see actually the budget that this company made has no real increase here. It's not you can't really view anything here. So I would say they have a wrong budget. And in the beginning, I talked about things like it's important to collaborate with your end user, and that users would work together. Well, in this case, I'd like to write to my USA vice president of finance to adjust his budget. And in order to do that, what I'm doing is I'm going to start a conversation with that user. So I'm give it a subject, and I will just say, please adjust the Q4 sales budgets. Budgets. And I'm going to send this to Jose Garcia, who is my USA VP of Finance. With the conversations, we can create groups of users. Conversations are private between users, but you can add as many users as you want. I'm just going to send this to one specific user, and I'm going to ask him to do this right now. Need it right now. I'm going to send this message. Well, the way how CXO-Cockpit works is that if the user, Jose, would not be in the system right now, it would send an email within 5 minutes that he missed the conversation. But within the first 5 minutes, a user can actually take the time to log in himself. So I'm going to open up a second browser. I have it right here, and this is actually Jose Garcia, who just logged in. And when Jose logs in, he actually sees that he has there's a little one here. I'm not sure if you can see it, but when he logs in, he sees that he gets a new conversation from his boss. So he opens up this report, and he sees, please adjust the Q4 sales budget needed right now. And the nice thing is that this report is completely the exact same view as I left it. So the way how Jose looks at it is that it's a snapshot. Any kind of drill down that he would have made would have been shared. So you're really looking at the same page, and you're having a conversation. So he's quickly writing back, I'm working on it. And I won't switch back to my user, but that would immediately show up. So this is a live window. It's almost like chatting. So I would immediately see that he picked it up. So Jose is going to go to his budget import form, his 2018 USA budget, and This biggest increase is typically not in the cloud business, which is more an ongoing revenue stream. You typically use your MRR to calculate your cloud revenue. But this is a typical thing that happens in the software licenses, not so much in the updates and product support, but much more in the licenses. And here I see indeed that, October, there is no increase in the budget. So I actually like to put this one to 500. This is to 400 and 450. And I'm going to increase my budget here to something similar, but slightly higher. Next year we always expect to do a little more. So this is going to be 140. This is going to be 440. That's what I want to do. 440, 540, and 460. I'm going to save this form and process my budgeting model. So what we're really looking at here, this is what we call our data warehouse adapter. Most of the data we grab from existing EPM systems. So CXO-Cockpit is not a full planning and budgeting system, but you have options for entering direct data and integrating it in your report. So since this company doesn't have a formal planning and budgeting system, they are using the data warehouse adapter to just either upload Excel sheets or do some data entry using forms like this. So after saving, I have to process the cube, and this typically takes about around a minute for the model to process. At the same time, what Jos is going to do is he's going to go back to his report, and he needs to wait for a second till this is finished in order for him to go back. So he can go back now to his report. He just clicks on the conversation. And he actually sees already, he can check the result before writing back. And he sees now that he fixed his budget. And it's perfectly in line with what the prediction would have said. So he says quickly that it's fixed. I'm going to move this browser away. And what you'll see actually is what I just said is that the conversations are real life. You only get a notification here about a new conversation in case you're on a different report. So if there's a new answer and you're in a different report, you would have seen it. But all this user needs to do is just to refresh his report. And he sees that actually the budget has been fixed. And that's exactly what he hoped for. So by going to his conversation, so the earlier conversation that they had, you can just quickly write back, okay, thanks. And that wraps up the process. I think predictive analytics needs to serve a certain cause. It's not just about some extremely complex algorithms that only a data scientist can understand, but it's more a process that can help you getting to better forecasts, or maybe provide an alternative for your plan or for your forecast, so you can compare different flavors. I know there are some trends where people let algorithms take over completely the manual forecasting process or manual planning process, and I believe that can be done, but within finance, with all the accounting rules, I doubt whether that would lead to good results, because within accounting there are a lot of choices to make. Okay, so far the demo. I'd love to answer some questions, but we're running out of time. So if you have any questions, please write them into the software, and we'll follow up using email, and we'll make sure that we're going to answer all your questions. And if you want to reach out to us and like to understand more of this platform and more about predictive analytics within corporate performance management within finance, please use this contact detail, and we'll happy to continue the conversation with you. I'd like to thank you all for your attention, and hope to see you at one of our next webinars. Okay, thank you.